morning, fellow option traders. This is Jeff, and welcome to the daily scan for Wednesday, October 23rd, 2013. If I sound a little bit congested, it's because I am. It's raining. It might snow here in central Ohio, and I got a cold. So I guess it's the sort of the start of the winter season. Oh well, another year. Anyway, yesterday was a bit of an interesting day, and today should be as well. Yesterday's unemployment went down 0.1%. However, the amount of new jobs, and I'm not sure if that's a net number or not, versus people who who are not looking for employment, who don't get counted. It's all kind of screwy, you know. It's like the consumer price index, where they just drop things out of the index to make it look better. But the good thing is, I believe oil is continuing its slide. So at least if you can afford to put gas in your car, or heat your home, or whatever your situation is, then I guess that's a good thing. Well, I think that's enough editorializing. Let's go on and take a look at what's going to be happening today. We have some minor impacts to the market and announcements here in import and export prices and EIA petroleum status report. A couple other ones that shouldn't impact the market too much. Take a peek around the world, and Asia is a solid bear day over there, with some hefty percentages to the downside. I believe that China is at fault here, possibly, but it's funny when you see a bunch of red over in Asia, and then here they're saying, "Yep, time to bet on the bulls. It's going to be a hot market. Bye, bye, bye." And over in Europe, also very solidly down. But, you know, bye, bye, bye. So, I don't know, you buy into weakness, I guess. That's one way that you could put it. Taking a look at the futures here in the U.S., we're looking at 0.5% down at the open, which is a pretty solid bearish open. Gold is at $13.31, and our friend oil is at $97.20. Do we like that or what? That's a pretty good deal for most people, I believe. Although gas prices aren't showing the same decrease, they are decreasing somewhat. All right, take a look at our current situation here. I was working out some numbers that I'm going to show you in a minute here for gold. Our Google at the money 1-to-1 risk-reward trade is still hanging in there. We haven't been beaten up too badly on that yet. Still could very easily move up above 1020 by Friday. We will be watching that closely. And our SPX weekly is also doing just fine. We will gap down slightly here from the close yesterday, probably around here at 1751. Is that where we are? We're at 1740 right now. So we're going to gap down to here, probably at the open. And hopefully the day won't be too damaging. And then let's take a look at gold. So I couldn't get my open office to work yet, but I do have one of those free copies of Microsoft Office, which is missing a lot of stuff, but at least it's got enough in it where I can do some calculations here. So looking at a chart for gold. Oops, let's actually look at a chart for gold. That would be interesting. And here it is. We are above our cost basis right now, or at least as of the close yesterday. Our cost basis is 128.67. So we'll take a look at our chart here. 128.66 here. I think we're rounded off or something someplace. So we took a look, or I did anyway. I don't know if you did, but I know I did. Took a look at the credit that we would collect as of this morning on each of these trades. Now the temptation sometimes is to say, well, I need to collect more than $1, or this is what I want to do. More money, more money. That looks much better here, and it brings your cost basis down. But if you get called out, you get called out at these strikes. So you have to be careful. And it shows up over here in your percent gain if you get called out. So if I do a 134, yeah, I'm only going to collect $83. But if I get called out, overall I make 4.83%. And of course your returns dwindle as you lower your strike price if you get called out. Now, if you're going to, you could do a happy medium here, and if you are close to this 132 strike at November expiration, you could roll, or even if you're above it, you could roll up. So it's all kind of a game. But for now, I think I'm probably going to just keep it simple. I'm still pretty bullish on gold, and I'm going to keep it at 134. I'm not going to go higher than that. I could go to 135, but I think we're just getting our deltas that just start killing us the further we get away from the strike price, or the current price anyway. So for today, possibly I get into this 134, depending on the price action for gold. Now, if we were to take a look at gold futures, we're down 10 here, which would be down $1 roughly on GLD. So we'll just have to see how that works out today. But what I'm going to do is I'm going to put an alert on gold. I think it's going to open down, but if it opens here at 129 or gets to 129.44 today, then I'll jump in on it. And I'm going to wait till then. And that's just for today. Alright, so that's our current positions. We'll just jump right over to the A+ list. Close this up here, and we'll start with Apple. We'll see how their announcement did for the stock yesterday. Didn't do a dang thing, did it? They have their earnings coming up, so that should be interesting. We have a target set down here, but this target is still prior to earnings. We might still do a trade this week on it, I'm not sure, but it's only Wednesday. I have another day for this week. Amazon, our target is down here. We have earnings coming up. We'll just move this over here. Post earnings. Earnings are tomorrow. Okay, Baidu's been on a wild ride. Oops, what happened here? I don't remember dragging that scale. Did you see me drag that scale? I don't remember dragging it. We're going to move this over, and we have a new target. But we have earnings coming up, so probably nothing going on there. So for Celgene, yeah, we're coming down to our target, but we have earnings. So there's a lot of non-things to do here. CF Industries, target is set. Earnings are out a tad more than most everybody else, so we're just keeping an eye on that one, waiting for it to mature. We have Chipotle, and I was saying that maybe we should do, this is a play, a pretend trade here, and we're right at it. So maybe that would not have worked out. We already talked about gold. We'll take a look at Google. We already kind of talked about them. Looks like we're in a new uptrend, so I'm going to place a target down here. And we'll see if we get to it. Goldman Sachs. Goldman Sachs just going sideways. Don't know what to do about that. So I'm going to take this off of here because there's no, I'm not seeing I like the waves, the waves going up and down like that. And when they're just kind of choppy and moving sideways, I don't see any directional trades available for that. LinkedIn. Alright, we're coming down to our target. But we have earnings coming up next week. MasterCard. Waiting for it to come back down to earth. I'm going to slide this one over a little bit. Not sure if it's going to before earnings. And if it does come down in this time period here with earnings that week, I won't be doing anything with it. Netflix. Whoa. Wow. I know that's an earnings thing, but you know what? I don't like that. I don't like that kind of a candle to trade on. If anything, I might jump in with a bear call, but that's not a good one. Now there was, I saw some headlines saying that there may not be any growth for Netflix, so I'm just going to sit back on that one. Not interested at this time until it settles down and figures out which direction it's going to be moving in. And the price line had a nice move down, but we're still waiting to see what's going to happen here with our simulated calendar here. We could take a look here on the Analyze tab and see what's going on. We're in a little bit better shape than yesterday, and our short strike expiration date is moving up slightly in the, it's been around like 41 or so, so it's moving up slightly in the volatility column here. So we're up to almost, the peak is up to almost 2,000. It was a tad below it last time we looked at it. So we're still watching it. It's kind of fun. Tesla. Let's see. We had an alert here. I don't think we're going to hit it. So let's just take a pass on that. And let's see if we might be able to squeeze one in here before earnings, but this is not looking very good, and we're not looking very good here on the weeklies either. So there's a lot of negative power right now that I'm seeing on the charts here for Tesla. Is it something that you would want to possibly take a look at a bear call for this week? Let's see what we could do. 180 up here. I'm going to take a pass on it, but I will put a price level here. 180 I said, right? So this would be a simulated trade. And we'll make that one red as well. Let's just see what would happen if we would have done it. We'll just leave it at that. Okay, and then Visa. Visa looks like it may have, there's a lot of resistance here. Mental resistance here at 200 here on Visa. So that may be priming up for a move down as well. But not even going to pretend to want to do anything on that one, but I am going to look. Here we'd have to do one at 200. There's not enough money in these. All right. Yeah, if it seems like as though I'm a little hesitant to pull the trigger, it's because it's earnings season, and I think it's a smart thing to do to just kind of sit back and stay light. The biggest risk, well, we have a couple of SPX and Google right now, and a couple of simulated trades. And that's probably the way that we're going to keep it. And we have one alert. So that's it for today. Thank you very much for watching. Have a great day and happy trading.